Hi everyone, and today as always I'm joined by Krishna Appala, a senior research analyst at Capital Mind. This week we've seen a lot of inflection points with regards to the markets. Events that we have been waiting for a long time have finally played out. The US Federal Reserve has cut interest rates by 50 basis points. Indian pharma stocks are rallying on the basis of the US Biosecure Act, where the market's basically hoping that Indian pharma companies are able to pick up supply chains that China is left out of now. Vodafone has finally gone to the Supreme Court and gotten a legal resolution with regards to its dues, and the news is not as favorable to the company. We're going to discuss the implications of that for the company and the broader telecom sector. We also got SpiceJet, which has pulled a rabbit out of its hat this week and raised the 3,000 crores it wanted to do so through its QIP. And lastly, we're going to be talking about NSE's IPO and any sort of news with regards to that. So Krishna, thank you for joining me. And we're going to start off with the US federal rate cuts, right? It's always expected that equities markets around the world will do better as the US Federal Reserve is cutting rates. However, research from Anup Vijaykumar, the head of research at Capital Mind, has found out that there's been a sort of decoupling of the US rate cuts and the Indian stock market since about 2004, where we have seen very minimal movements with regards to that. There's also fears that the US rate cuts perhaps have come too late and we might see a recession in the United States. So what is your view on all of this?
Hey Rithupar, firstly, thank you for having me. It has been an interesting week, isn't it? First, on the Fed side, everyone expected 25 bips because it was already priced in the markets and all, but 50 bips has came little on a positive surprise. Globally also, the initial reaction was more like by the rumors and the news where US markets have fallen. Yesterday, Indian markets have fallen. However, today we have seen yesterday Nasdaq was up 2.4%. Today we are seeing huge rally in our Indian markets. So overall, a broad level, it is definitely a good start. What's more interesting is Fed's commentary. What they mentioned is that we are starting with 50 bips. There is a possibility of another 50 bips in maybe two tranches in 2024 itself, and which will continue further in 2025 and 26. That's a huge boost in terms of overall global economy. Second, talking internally, when you talk within India or domestic markets, the actual things start only when RBI follow the suit. Of course, the anticipation is that RBI, it's just a matter of time where RBI will also start cutting its rates. That is where Indian markets, especially the financials or the overall Indian market, will see a huge demand boost, because right now, as we speak, MSME is in distress. SME and MSME is in distress. MFI, microfinance sector, is in distress. The credit growth is kind of not exactly muted, but it is not growing at a double digit, which we usually anticipate. So this will come to us when RBI starts to cut its rate. Right now, what happened is a sentiment booster. When this happens, RBI, the actual on-ground reality we are going to see. But right now, what are the positive sectors, if you may call? One is financials. Obviously, we are seeing Bank Nifty hitting all-time high, etc. Second one is pharma and IT. Pharma we'll discuss, there is one more reason. But pharma and IT, because usually when rate cut starts to kind of rate starts to fall, there is a demand pickup because every corporate will start to open their purse.
Specifically in the US, right?
Specifically in the US, exactly. And then that revenue will eventually come to Indian and other emerging markets. So financials because of domestic markets, pharma and IT because of demand surge, which by the way is what the other IT companies management is also talking about. So these three sectors we are currently bullish on. The actual thing will start once RBI starts to soften it. Right now what is happening is more of a sentimental thing.
Got it. So, I mean, what you're trying to say is that while there might be a larger decoupling between the markets, there are certain sectors that are poised to benefit from the fact that there's going to be an increased demand in the US. Do you expect the RBI to follow suit?
Definitely, but may not be immediate, like within 1 week or 1 month. Maybe in next quarter or 1 or 2 quarters, it should follow.
Got it. And do you think that, I mean, the Fed has obviously in its commentary indicated that they're going to be, following a looser monetary policy going forward over the next couple of years. Do you think the fact that they had very high inflation recently might, cause them some concern going into the future? Do you think inflation remains a concern?
No, I think inflation is actually below RBI's threshold, around 4.2 percentage. So that way it shouldn't be an issue. And so initially data point should suggest definitely, but also RBI has been waiting for Fed to start the rate cut. So since these two things are happening, the inflation is under control and Fed has started to loosen. I think it's just a matter of time before RBI also loosen the interest rate, start cutting the interest rate.
Got it. So you mentioned pharma as one of the sectors that's going to do well. And we recently saw the passing of the US Biosecure Act. And what the act essentially does is that it sort of removes or places constraints upon US companies and the government from doing business with certain countries and certain entities, specifically China. People are saying it's targeted towards China. And there's a large part of exports that comes to the United States medical industry from China, right? I mean, they have a lot of formulations, generics that they're able to supply. India's also got a foothold wherein we supply APIs, we supply generic drugs. Does this act give us additional headroom for growth, and what are the threats that perhaps we are going to face from other countries in terms of capturing the supply chain?
Okay. So what is Biosecure Act basically? So the thing is, if you go back towards COVID time, we have the entire world, global markets have faced a huge issue on the logistics side, or importing commodities from China, etc. and all. So slowly everyone is moving away from China, or to reduce dependency on China. So as a first step from US, what they have introduced is that Biosecure Act. Basically what they are saying is that you have 8 years from now for all the major pharma, especially if you are into biotechnology sector, you have to reduce our dependency from China, and then move to friendly nations, which is India, Switzerland, South Korea, Vietnam, etc. Actually, it's not just specifically China. It has named some 5-6 countries. Obviously, China, North Korea, Cuba, a couple of other nations. Not so Russia, not so friendly nations of US. And as an initial step, they have mentioned 5 Chinese companies, 5 Chinese pharma majors. And why those 5? Because these 5 companies have very close association with China government. So what Chinese government is doing is that, okay guys, you have 8 years. You do one thing. You first reduce your dependency. You go to the other nations, India, South Korea, as we mentioned. You do a plant visit, do initial projects, give them initial work, small work, and then if you have confidence, then onboard them or get associated with them, so that your dependency with China will be reduced. How it will benefit India is that, especially not all Indian pharma market, not all Indian pharma players, please understand, it is only for CDMO. Basically, if you are in drug discovery, you will be mostly benefited from this. But if you are a API player or bulk drugs and or not so into it, you will not so this is nothing much for you into it. For CDMO players, what is happening is that the 5 major
could you
players,
explain what CDMO is?
Okay, CDMO is okay. So CDMO is Contract Development and Manufacturing Organization. Basically, it is like a second brain for the innovators, pharma innovators. So pharma innovators are usually in US and Europe, but they want to outsource to a relatively cheap labor, but they don't want to compromise on their abilities, on their innovations and all. So typically the pharma innovators come to India, they associate with Indian CDMO players, which are typically the likes of Syngene, Suven Pharma, Jubilant Pharma, etc. No recommendations, etc. and all. So US innovators come to these guys, say that, okay, we want to discover a drug, and typically the drug discovery is around 12 to 15 years cycle, because there are 3 phases, and each phase will have so phase 1, phase 2. Phase 2 will have phase 2A, 2B, phase 3 will have 3A, 3B, and then you finally go to FDC for approval and all. So in this process, you associate with me, you have the cost structure, you have relatively better costing, and I have the R&D in my side. Let's collaborate and let's take that drug forward. Now, with this Biosecure Act, what is happening is that US innovators are going away from China players and typically may come to Indian CDMO players. And again, as I mentioned, it's a 8 years process. It's not a immediate thing. But however, the tailwind is in place for them to actually move away, and which will be more beneficial for Indian players. This exactly is the commentary for all CDMO players. You take the names which I mentioned: Syngene, Jubilant Pharma, Suven Pharma, Pyramil Pharma, etc. All of them are Loris. Also, all of them are the kind of looking forward for it, but they also acknowledge that it's not a 1 quarter, 2 quarter thing. It's a long-term tailwind in place. If you ask me to how to look at it, exactly what happened in agrochemicals or specialty chemicals in 2014, where basically the entire world moved away from China to the same players in for specialty chemicals. The same thing is about to happen now for pharma in CDMO players over the next 5 to 8 years.
Got it. And so in oil, for example, we have seen India become a major third country in sourcing resources from, sort of Chinese bloc and helping distribute it through Europe and America, which have direct sanctions, so they can't deal with these people. So again, I mean, this Biosecure Act is a form of sanction. So do you think, I mean, there's scope for us collaborating with the Chinese and, sort of gaining their support and, sort of labeling the products with an Indian flag and exporting? Or do you think it's going to be a lonely journey where India has to figure it out itself?
No, very valid point. See, you can't take out China from the equation. If you have a global commodity equation, if you have a global manufacturing equation, China commands around 40% market share in every aspect. So you can't take China away from it. Obviously, we have to import from China. Our pharma players have to import from China. That definitely will have. However, again, it will, if on a geopolitical side, it will be beneficial for us no matter where we procure from. So we just have to look it from that capital markets perspective, which is good for us.
Got it. And you mentioned specifically the players that are going to benefit from this are CDMO players. Do you think other pharma players have something to benefit as well, like pharma players who don't do anything with regards to CDMO?
No, majorly CDMO, because they are the ones which are into drug discovery. Not so much, as I mentioned, into bulk drugs or API players. But if you have a generic company like Sun Pharma or Lupin, if you are a Cipla, definitely that these guys will benefit, because these guys also will have a certain CDMO player. The major guys that will benefit is the guys which have 80-85% of their revenue coming from CDMO, which is Syngene, Suven Pharma. Jubilant Pharma has around 15-20% coming from CDMO. They are the major players, and it's a pyramid like spectrum. Highest CDMO, higher the beneficiary. Low CDMO, low the beneficiary. Generic players will fall somewhere in between.
Got it. And Model Research, which is a market research firm, has estimated that the CDMO market for India is going to grow from about $22 billion to $44 billion over the next 5 years, which is a CAGR of 15%, effectively doubling the value of the market. So we'll keep a track of this and see how this plays out, right? So the next thing I wanted to talk to you about is Vodafone and the broader telecom sector. There is, a slight difference. I mean, slight is putting it lightly. It's worth a few thousand crores, this slight difference, in the way in which the government interprets ADR dues and telecom companies interpret it. Vodafone specifically, which is sort of strung for cash, has been going to the courts asking for them to sort of understand the ADR dues from their perspective. However, the Supreme Court has earlier declined this, and again declined this again when they filed a curative petition, refusing to intervene. So Vodafone had also recently raised some money. What is the long-term outlook for Vodafone, and where is the broader telecom sector sitting at?
Okay, so just to give you a brief, what is AGR? Basically, adjusted gross revenue. So what happens is that since spectrum belongs to the country, you as a private player has to pay some fee, spectrum fee, license fee, etc., to the government, which by the way telecom players have also agreed. This I'm talking about 10-15 years back. But government later said, okay, so how if you how telecom players make money? They have two main segments. One is the telecom, the actual thing, and non-telecom revenue as well. So telecom revenue is the calling where they make money on that, and non-telecom revenue is more of other income or rental income, etc. So let's say there is a telecom tower out there which actually belongs to Airtel, but Geo can come and set up their device. By the way, Geo then pay rental to Airtel. So that is a non telecom revenue for them. What telecom players are saying is that we will pay you the spectrum fee, license fee on the telecom side of things, not on the non-telecom. But government is saying that no, nothing like that. You have to pay the fee on the overall, the gross revenue aspect of it. So that was the case actually. Coming to Vodafone right now, what happened was Vodafone has a due of 58,000 crores in AGR. And since the so couple of days back, the Supreme Court has rejected the AGR plea and asked Vodafone to pay with the interest, which increased from 58,000 crores to 70,000 crores. So that is additional 12,000 crores burden on their existing 2.4 lakh crore debt. So that's huge. That's imagine your operating revenues, operating profits are 17,000 crores, and your interest outflow is 24,000 crores. You are technically in deficit. So that's the major issue where all the what we are seeing right now, the share price has fallen 10-15% and it has been continuously falling. The FPO happened at 12 rupees. It is currently trading below the FPO price of 10.6 rupees, etc., whatever it is. So the biggest question right now to ask is where is Vodafone heading? See, I think it has been day by day it is getting difficult for Vodafone because again they are AGR due. The only respite they got at least 3 months back is that Reliance Jio has increased the prices, start increasing the prices. So and then everyone followed. Airtel followed, Vodafone Idea followed, and all. So they are looking for ARPU to go from currently 180 190 rupees to all the way initially up to 250 and then to 300, which is where their revenue is going to increase from. However, the good times didn't last so long for them. Within 1 month or 2 months, they have taken a hit of this. On the cash flow front, they are about to pay around 29,000 in 2025, and from there till 2020 every year they have to pay out around 45,000 crores in terms of both interest payments and principal payments.
That's 2030, right?
Till 2030,
Yes.
exactly. So that's huge. I mean, right now where are they going to bring the money from? So it's a typical run for buck situation where you continuously run on the treadmill where but you are still there, you're stuck there. So that's the kind of situation. It's getting difficult for Vodafone. We have to see. So right now again the Birlas have to infuse more money. Vodafone UK has to infuse more money, by the way, which they have committed earlier at that during the time of FPO. They said that they are committing more money. So we have to see. Right now it is getting difficult for them.
So, I mean, right now, to me, the situation seems like without these capital infusions, Vodafone is headed towards bankruptcy. Do you think, I mean, there's any scope for the government, again, taking a stake and diluting everyone and forgiving the dues?
That is a possibility is there, but again first they have to raise money immediately. They have to go out for another dilution, and if that didn't happens, then the worst case scenario is again the government increasing the stake, their already existing stake. If that also failed, then maybe the bankruptcy, but bankruptcy is still maybe a little far away, too early to comment on it.
Got it. And market research firm CLSA, by the way, has estimated that by FY26 is when a lot of this is going to, a lot of the interest payments, a lot of the debt redemption is going to play out, and maybe they'll face some cash flow issues then. So the next thing I want to talk about in the same vein is SpiceJet. We talked about SpiceJet a couple of weeks ago, and we were we said we were going to be very surprised if they managed to raise the 3,000 crores to the QIP, and hats off to the promoter and the promoter group, which has managed to raise the full amount, and it was in fact oversubscribed. But they still have a lot of challenges, right? They, depending on the news reports, owe between 350 and 450 crore rupees in terms of TDS and PF payments. They also have a lot of their fleet which is grounded. They are losing market share every day to Indigo and a resurgent Air India. So, what are the next steps? How are they going to utilize this capital, and what is the situation going to be like for SpiceJet?
So this actually it's a very positive surprise, because see, SpiceJet currently net worth is negative 2,500 crore roughly, and with the 3,000 crore infusion, they have become their net worth become positive. That itself is very huge. Okay. On top of that, of course, the around 60% of their fleet is grounded, so the operations has to increase, etc. Definitely, but on the other side, if you see the airline industry is getting consolidated, which we discussed by the way. Hardly there will be at least only 4-5 players, major players, will be left out right now. Air India, definitely, and then you have Indigo with the 60% market share. Air India and Vistara put together roughly around 22% market share, and then Akasa is roughly around 7%, and Indigo is currently at 3.54%. So these four are the major domestic flyers, and with this infusion and with overall tourism industry is increasing, I think it's headed in a right direction. There is, because as we discussed last time, there is nothing wrong on the demand side of things. Demand side is definitely improving. SpiceJet has secured the much required fundraise, which they turned up, and the debt is not so much. The balance sheet debt is hardly 6,000, 7,000 crores. So interest payments per year comes to at around hardly 800 crores. I think with this kind of infusion, they can manage, and they can definitely get back to their previous market share of 8 to 9% in coming years. So it's surely a very good positive for overall industry and SpiceJet as well.
Yeah, so they've sort of pulled a rabbit out of their hat.
Definitely.
But they're going to have to perhaps pull out a few more rabbits out of their hat.
Yes.
Especially going up against Indigo. So the last thing I wanted to talk about was the NSE IPO. The NSE had initially filed in 2016 papers for their IPO. They have basically taken SEBI approval in the past again, but they've ultimately not gone ahead. Recently, they did a 1:4 bonus issue, and that has led to speculation of an IPO. So could you shed some light on NSE, and what are their prospects, and do you see them listing for an IPO?
See, NSE has been one of the most traded unlisted share in the last maybe 2 to 3 years. NSE as an exchange is world's largest exchange in terms of derivative volumes for fifth time in the row. So with that, okay, let's just look at the valuation of NSE in unlisted market. So 1 year forward, FY24 they closed revenues at around 16,300 crore and PAT at around 8,300. And 1 year forward, the expectation is they'll clock around 20,000 crore revenue and 10,000 crore PAT. And currently they are trading at 2,70,000 crore in unlisted market, implying 27 times 1 year forward. So that in a way it is actually a reasonable valuation for a moat which NSE carries, by the way. Now, what has changed in the last 1 week is, see, and SEBI has kind of cancelled the cases. So basically, it has rejected the cases or dropped off the cases which on NSE for co-allocation issue or Chitra Ramakrishnan issue, etc. and all. Second one, SEBI has allowed NSE to increase the share capital 10x. Usually why this happens is when you are getting ready for the IPO, you have to usually this you have to increase your share capital and then you go to SEBI, etc. and all. So SEBI has approved that. Third one, NSE has kind of given NSE has already announced 4:1 bonus. Now they has given a record date as November 2nd. So these three issues are kind of telling a indication that the long pending IPO, long pending, I mean really long pending, because I remember sometime in 2016, SBI sold NSE stake, 5% stake to some Mauritius fund for at a overall valuation of 18,000 crores. And now we are talking about 2.7 lakh crore. So that's the growth. So it has been pending for last 8 to 10 years. So finally, the idea is that NSE is coming up with IPO. It's just a matter of time. That's one thing. Second one, on why everyone is kind of interesting is again the valuation. So NSE being the market leader, we'll compare with BSE as well, but with the market leader there is a high scope for P re-rating after it lists. So right now at 27 times, the expectation is that with whatever IPO market right now, the listing can definitely happen at a huge premium, and there is a re-rating possibility on NSE. Now the most asked question, let's compare it with BSE. See, BSE is definitely doing some really good things because especially on market share wise. So the cash market, which technically NSE was around 97%, BSE was around 3% in 2 to 3 years back, not so long ago. Right now, NSE has fallen from 97 to 93, and BSE market share on cash market is increased from 3 to 7%. More importantly, on index options. Index options 2 years back, NSE market share is technically 99.99%, technically 100. But in 2 years, what happened was there is a new management in place, and by the way, he's the same guy who is the architect of Bank Nifty. He moved to BSE and he started Sensex options and Bank Nifty options. So technically moving from index options market share from 100% to around BSE has took around, if I may say, 12% in the last 2 years, 1.5 to 2 years. So BSE market share increased from 0 to 12%. NSE market share in index options has fallen from to 100% to 12%. So a couple of things, again, BSE has increased. BSE has taken a huge stance on the competitive pricing. So NSE option premium, if you may call, is around 16%, 16 bips, whereas BSE is competing with only 5 bips. So that's the kind of competitive pricing they are giving. So again, it's a kind of a circular reference, if you may call. BSE is going up in the last 5 days or 1 week because of anticipation of NSE pricing. And if you come to NSE unlisted market, NSE is valued at BSE pricing valuation. BSE is valued at 55 times, 60 times. Here NSE is at 27 times. So we have to give. So it's a circular reference, circular kind of reference is happening right now. So yeah, everyone is anticipating NSE to list at a premium because unlisted is at currently still a relatively better valuation. So that's where we are looking at.
The valuations for NSE look very reasonable. And so do you think it's a good idea to perhaps go out and buy unlisted shares of NSE?
It's not easy, by the way, because NSE, if you want to become an NSE shareholder, you have to need a NSE board approval. So even on the unlisted shares, the process will take at least 2 to 3 months. Okay, so there are many investors who have invested in NSE unlisted market, but it's a process of 2 to 3 months. So it's a delayed process as compared to any other unlisted. Any other unlisted, you will get it in maximum same day or T+2 maximum. So with that delay in place, still, if you may ask, yes, NSE unlisted is still undervalued and have that kind of upside even now as well.
Yeah, no recommendations, right?
No definitely not recommendations.
Okay, yeah. So the last thing I wanted to touch about very briefly is, infrastructure stocks. And so the genesis for this is the fact that the firm CLSA had sort of introduced an index of firms that had synergy with government policies, right? And they had seen a rise of about 25% in the first half of the year. But since the elections on June 4th, We've seen that they've only gone up about 2%, whereas the Nifty 500 and the Nifty 50 have gone up about 10% and 11% respectively. What do you think is the larger story over here? I mean, is the government perhaps becoming more populist in its policies? Do you think they're going to shift away from the sort of push that they've been giving into infrastructure, into other priorities?
See, that was the initial idea, at least what market is thinking, by the way. The interim budget which we had seen in July is kind of, it's not a full year budget, right? The real full year budget will come in Feb 2025. The expectation, or you may call progress from the government point of view, is that okay, because of the not so good results on the election mandate, the government may shift to focus more on socialistic reforms or populistic reforms. And if you are spending more on these items, you have to obviously cut down on your infrastructure or government capex, etc. and all, which has been, by the way, driving all the PSU stocks, all the infrastructure companies in the last 2 to 3 years. So we are already seeing some cracks in defense names, some cracks in infrastructure names, etc. for the same thesis, which market is fearing to play out. Obviously, market always is pro government capex in terms of infrastructure and against socialistic, populistic norms. So we have to see, too early to comment anything right now, but we have to wait for the full year budget to see how in a way we kind of got a little bit sense, because the defense spending government has cut 0.3 percentage of what it was expected. It was expected to be 6.3 lakh crore. However, government has given 6.26 lakh crore something. So it's small 0.3 percentage cut in defense spending. And you see what happened in the last defense stocks in the last 1.5 to 2 months. The fear is that what if the government does the same thing, not just in defense, for all other infrastructure projects? So that's the fear right now, and we have to see how. And February is hardly less than 6 months away from us. We have to see.
Yeah, we'll finally know by February, right? Cool. Thank you, Krishna. And that's it from our side. I hope you enjoyed this episode. If you have any topics that you would like to suggest to us, let us know in the comments or email us at podcast@capitalmind.in. Happy weekend, and we'll see you again next week.
Thank you, everyone.